Today, it's the beginning of the end of 2020 as we enter the fourth quarter on the first day of October. It was a rough September for the stock market, so what can we expect this month? Plus, government money for the airlines has officially expired and the mass job cuts have begun. 32,000 airline employees have been furloughed, as Washington still cannot come to an agreement on additional relief funds. And finally, employees at crypto platform Coinbase can no longer talk politics at work. I'm MacKenzie Sigalos, and this is CNBC After Hours. We made it. It's the first day of the last quarter of 2020, and stocks started off October with green across the board. Take a look at shares of Facebook, Alphabet, and Twitter. All three finished higher today after the Senate Commerce Committee unanimously voted to subpoena the CEOs of these tech giants to testify about their legal protection from liability for what users post on their platforms. Today's gains come after Facebook and Alphabet both turned in 10% declines in September. But it wasn't just them. Stocks across the board had a rough September. The Dow, S&P, and NASDAQ all posted losses, each breaking a 5-month winning streak. And October started off today with some worrying economic data. Now, jobless claims, which is the number of people who filed for first-time unemployment benefits, came in around 837,000. Now, that's less than last week, but still stubbornly high. During the Great Recession, jobless claims never ticked higher than 665,000. And personal incomes are down. Those numbers declined 2.7% in August, which is the biggest drop since March. Now, consumer spending did edge higher in August, but only by about 1%. So yes, an increase is good, but it's the smallest increase since April, which starts to paint a picture of a sputtering U.S. economy. In this type of environment, and after such a bummer of a September, what should we be expecting from stocks in October? CNBC's Bob Pisani can break it down.
September was a rough month, but October could be an even rougher month. And that's because if you look at the buckets, the things that actually have been moving the stock market in the last 6 or 7 months, all of them are potentially in play in October. So number one, you've got the elections. We've got a lot of uncertainty about whether there will be a winner on election night. And then President Trump has indicated he might even challenge the results. That's uncertainty. Number two, you have the stimulus. I mean, we don't know if we're going to get a last-ditch deal between Pelosi and Mnuchin right now. That's sort of hanging out there and affecting the markets. The third thing is how the reopening story is going in general. We've had better economic data this week on consumer confidence and payroll reports and home sales. And so generally the numbers have been pretty good, but it's being balanced against some bad news. We're starting to see increased layoffs. There's going to be more layoffs coming because we're going into earnings season and the companies are going to announce their earnings and then they're going to say, oh, by the way, we're furloughing people or laying people off. So traders are watching the stimulus really carefully because they believe the stimulus will act as some kind of balance against some of these layoffs that are being announced. So a lot going on. And finally, we've got the whole COVID thing, the treatment and vaccine story, as I call it. There are a lot of people hoping maybe we'll get phase 3 vaccination results from some of these companies floating out there that are testing vaccines. So there's just an awful lot of things for the markets to deal with right now. That's why I think October is going to be particularly volatile. I think that the issue right now, the concern for the fourth quarter, is that a spike in infections could slow down fourth quarter growth. So generally, there's been a reopening story, which is the market has bought into, that things are slowly reopening. If you get a spike in infections that sort of reverse that, that could be a concern. That's why everybody's watching this data with a very, very microscopic eye, you can say.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
The overall progress, I think, has been quite phenomenal so far. And we are expecting the GDP levels to reach to about 96.5% when we get the third quarter GDP data, which is much more surprising number compared to where we were just about a few weeks back.
I think specifically we chose to enter the market through the SPAC route because it allowed greater speed, efficiency of deal, and flexibility relative to the traditional IPO process.
We intend to sell the non-US assets that they don't fit our core structure. Despite being a great brand and a great business overseas, we are a domestic-focused company here.
For years, it's been called development hell because, and it's an antiquated system that does, inadvertently block new voices from coming in, because it boils down to this ancient system of just people keeping lists, the gatekeepers, the buyers, talking to agents, reading scripts. It's a very slow process, and writers enter it with very, very little leverage. So initially, this was a solution to sort of aggregate those people, give them an opportunity, give them leadership and mentorship, and help cut through that clutter.
All right, so we ran a story last week here on After Hours about the airlines. They were days away from running out of the federal bailout money that was keeping employees on the payroll. Executives were making last-ditch attempts for another stimulus bill in Washington. Well, September 30th has come and gone, and though negotiations are heating up between the Speaker of the House and the Treasury Secretary for another coronavirus aid bill, no stimulus has been passed, which means that this morning, more than 30,000 employees at American and United have been furloughed. CNBC.com airline reporter Leslie Josephs is back to explain what happens next.
So this is really a dark day for the airline industry. They have been warning for months that if Congress didn't pass another stimulus package that included another $25 billion for airlines, that they would have to lay off tens of thousands of employees. And that's what we're seeing today. So American Airlines and United Airlines are making up the lion's share of this. We're looking at 32,000 employees, mostly unionized, that are getting furloughed, flight attendants, pilots, mechanics, fleet service workers, customer service workers. And that begins today. Airlines, the executives and labor unions have been in Washington urging lawmakers, urging members of the Trump administration to provide more aid. That proposal had a lot of support. That wasn't the issue. The issue was the House Democrats and the Trump administration were unable to reach a deal for a larger coronavirus package. What United and American have said is that if Congress and the White House are able to reach a deal, something that looks like it's going to pass, or if there's a standalone bill for the airlines to provide this additional aid, which would protect jobs, by the way, through the end of next March, that they would reverse course and they would start recalling those employees. There are airlines that are not furloughing today, Delta Airlines, for example, and Southwest. And one of the reasons why is because tens of thousands of other employees have signed up for buyouts, they've signed up for early retirement packages, leaves of absence, and that's really driven down the labor bills. So airlines right now, not a lot of people are flying. We're maybe like 30% of where we were a year ago. That hasn't gotten above that because people are worried about the pandemic. There's no business travel. So they're just trying to conserve cash wherever they can. And that's helped them somewhat. It's not clear how long that's going to last. So that's partly why the industry as a whole went to Washington to ask for this additional money. The bookings have so far been obviously weaker than last year, but it's harder for them to gauge what it's actually going to look like at the time that the holidays do roll around. Fares are lower just they're trying to fill their planes. That means lower revenue even from the passengers who are flying. And this is not something that's going to turn around right away. I mean, we talk about a vaccine a lot. When is that going to be? We don't know. But a lot of executives are expecting this to be a problem that lasts for years.
Okay, time for today's numbers round. First up is 4. For the first time in nearly 4 years, Bed Bath & Beyond reported an increase in same-store sales. The big box retailer reported earnings this morning and stunned Wall Street by turning a surprise profit, while analysts were expecting a loss. Bed Bath & Beyond's e-commerce sales skyrocketed more than 80% during the quarter as people shopped for home goods as a result of spending more time working and learning in their houses. And earlier this month, the company announced a nationwide rollout of same-day delivery, with the holiday season just around the corner. Shares of Bed Bath & Beyond stock surged about 30% on these stellar numbers. Next is 6. Cryptocurrency platform Coinbase is discouraging its employees from activism and discussion of politics and social issues at work, and offering severance packages for anyone who doesn't like it. In an email to staff, CEO Brian Armstrong offered up to 6 months of pay for employees who decide that this new non-engagement policy is not for them. The move from Coinbase stands in stark contrast to the status quo in Silicon Valley, where companies have embraced social justice issues in recent years. And finally, 1 million. Snapchat tells NBC News that it's helped 1 million of its users register to vote. The spokespeople said that of those 1 million, 80% are under 30 and more than half are first-time voters. These efforts may prove to be beneficial to Democrats, since younger voters overwhelmingly oppose President Donald Trump. According to an NBC News and Wall Street Journal poll, millennial and Gen Z voters favor Joe Biden to Donald Trump by almost 2-1. That's it for After Hours, but before we go, here's one more thing to keep an eye on. Tomorrow is the first Friday of the month, which means that it's Jobs Day. It's the last check of its kind on the state of employment in the country before the presidential election. Get all the numbers in real time by going to CNBC.com and downloading the CNBC app. We'll be right here in our home office every Tuesday, Thursday, and Friday with a new edition of After Hours, so be sure to catch us tomorrow.